Hey, hi everyone. We will start the session. Good evening to all of you all. Utpala, I have just started. Then let me take this as the discussion of the SL3, which is your previous paper discussion, which is on the June 2023, which as a help for you to take experience to pass your next exam, which is upcoming examination, the December 2023. Then what's the first thing? This is not just an answer discussion. I need to go through on the paper and I need to go for the questions and I need to explain how you all approach to the answer, particularly on the answer format, not only on the lengthy answer, which a tight lengthy answer which you all expecting. Rather than that, actually I need to come up with the thing which when reading the question, how you all take the answer format to gain your mark. If you have a proper format, of course, you can go for that detailed answer in a particularly a good manner. The writing part as well as in the calculation, both you should have to have a structure, how to approach on this. Then with this all, then let me start the commencing of the paper. The thing I'm starting from the question 3. Today I need to complete the last 50 marks of the paper, and in a very recent day again I will take the question 1 and question 2. Okay, then let me share the screen and we will start on this. Then here we go. This is your paper, which is last paper, SL3, June 2023. Now, I think I will take 5 minutes, only 5 minutes, to take this part, which is as essential for you up to now. While preparing for your examination, one part for the preparation is having these very, very important open book referential materials. Then let me take just 5 minutes on this. Then ask from yourself, do you have this Inland Revenue Act? It's not only the main enactment, it's a 2 amendments relevant to y'all, which is the Act number, the 10 of 2021 and the Act number 45 of 2022. You should have these 2 with y'all. And again, the next thing with reference to VAT, again, up to all the amendments, up to Act number 44 of 2022. Then that's key things and plus relevant gazette notifications you should have with your hand before you are going for the examination. Therefore, it is critical for you to have this 1, 2, 3 open book referential material for your December 2023 examination. Then keep all these things with you. If you have not brought these things, sorry, then please, it's high time for you to buy these things and prepare for the examination. It's a part and parcel of your examination. Then that's only on the open book referential materials. And let me come to the paper. I'm not coming to section 1 question, 1 and 2 both, but I need to come for this one, which is the section 2, which is pre-scene based question. Why I have selected this? Because I need to point out some key points in the question. I'm sorry for this voice. And the next thing, after doing this question, I need to come for the examiner's comments. And we need to look at on this, what is the progress of the student. Let me do this with you all. Then after that, we will look at what has happened actually. Okay. Then for this one, your pre-scene will be, it has been issued before the exam. Then based on that, let me come to this, which the pre-scene. I will take this thing. This is the last time pre-scene material. And in the pre-scene, how many companies am I? It's a 3 companies. Company 1, which is Plantation. Company 2, the Crystal Sand Beach Hotel, which tested for you. and the Paradise Travels. Again, this has tested. Then, when it comes to a pre-scene, now 3 company information has been provided in the pre-scene, and among 3, 1 it has tested. Then it's something can be happen. Then in the pre-scene, very detailed the information with reference to these companies given, and you are well prepared for pre-scene information. Then among these 3 companies, one has tested. The tested company is this, which is the Crystal Sand Beach Hotel Private Limited. Then that is our company in our unseen. That's why I have taken this to just to show you all then how these the 3 among 3 one has tested, and again this Paradise Travels Private Limited, it also tested for a writing part of after the 30 marks calculation. Now you have little understanding on this, and I will come to present information as much as possible when it's relevant for the question. Then let me again come to the paper. This is the section 2. Then here, which is in the question 3. Now, as usual, let me come to this one, which is, this is your question, and this what the examiner required from you all, which is the assess the balance income tax payable or refund due, if any, of CSL for the year of assessment 22-23, which is the same year of assessment applicable to you for this December 2023 examination. The same law, then everything is same for December 2023, your examination. Now, when it comes to this 22-23 year of assessment, all of you all know that from 1st October 2022 onwards, the tax rates, final withholding payments, final withholding and withholding payments, it was changed from 1st January, and the tax rate has been changed from the 1st October up to 30th September. There was another tax rate. Then like that, the changes happen, and we have to go for the proportionate basis on business income, and we have to go for the actual basis on investment and the employment income. There are changes happen, but keep in mind that changes it's for the latter part. It's for the end of the question, end of your answer. But for the before that, all the adjustment it's you have to do. Then don't think lot on that apportionment application of the different tax rate. It's at the end. You have to do lot of things to earn marks before that. Then let me come to this one, which is the question. I will read it, and one by one adjustments we will take. Then it's a pre-scene based question, para A. In addition to the information provided in the common pre-scene in related to Crystal Sand Beach Hotel, this is your company, CSL. Then in here, the following additional information in relation to the company for the year ended 31st March 2023 is as follows, is available. Now come to here, detailed unaudited income statement of CSL for the year ended 31st March 2023 is as follows. Now revenue, cost of sale, GP. Now this is one of the key things you need to know, which is the notes. Then the notes is the essence. The particular adjustments are given through the notes. Then here, which is the gross profit and the other income, very important. Administration expenses, which is the advertising and marketing expenses, which is the other operating expenses, and the finance income, finance costs, and all these things are in the note. And afterwards, we have, which is the revenue, how it's this 142,310, how it came, rooms, food and beverages, other operating income. And the other income and gains, rent income we have. Just I'm the student who is reading the question at the exam. Then while reading the question, what I'm doing, rent income. Then if it is a rent income, we have to go for two things to determine whether it is effectively connected to the business or else whether it is investment income. Then again, I'm thinking if this is a rent income, then after 1st January 2023, then there is a withholding tax provision applicable on my rent income. What is a withholding tax provision? If I have given my property to the conduct a business, I'm referring to section 84 and the first schedule, subparagraph 10. Then in that, if I have given my property to conduct a business, then from that, if I'm receiving the monthly rent, if it is a more than 100,000 per calendar month, then the withholding tax provision, it is applicable. Now, when reading the question, I'm thinking, then the dividend income. Now, again, in dividend income, I'm thinking, okay, our dividend income is, as usual, it's my investment income. Why? This is hotel. The hotel is the providing of hospitality services. Then this is dividend income. I have invested in shares. Then here on dividend income, I need to think, this is, okay, this is investment income. And the second thing, is this received in which period? Is it after 1st January 2023 or else it's on which is up to 30th September 2022? Then is it received out of profit? Is this received dividend distributed? The dividend received to another company which is exempted? Now all the things which I have learned, it's coming to me. And the profit on sale of disposal of the fixed asset, I know it's accounting entry. I have to remove it from the profit before tax. And the fair value gain on disposal of shares listed on the Colombo Stock Exchange rather than the fair value change. I'm taking disposal of shares listed on the Colombo Stock Exchange. The realization has taken place. Then it's 450. Then this is not part now, it's in my profit before tax. This is not part of my business income. I need to remove this from my business income and I need to take this under investment income then since this is a realization gain, but it is exempted. Now when reading the question, these things come to my mind. And I'm not starting from this. I need to go for the adjustments and one by one adjustment, I'm coming to this relevant notes. And extract of certain expenses recorded under cost of sales, administrative, the advertising and marketing and other operating expenses. This is all the categories of the expenses in here. We have salaries and wages, laundry charges, provision for retirement benefit. Obviously, it's disallowed. Bad and doubtful debts. We need to look at what is the nature. It is what should be included in their professional fee. When it comes to professional fee, I'm thinking now for professional fee from 1st January 2023, if I have taken the professional fee from professionally qualified, that's mean an independent individual. If the payment is more than 100,000, again I have to deduct 5%. Then is that subject to this? Which period this has received? And the staff welfare? Then we need to think staff welfare, what should be included? Inventory provision, being a provision under section 10, subsection 1, it's a B Roman 8, it should be, any provision, it should be disallowed. Improvement expenses, the section 14 application, then CSR expenses, obviously not incurred for the production of income, this should be disallowed. Mark-home expenses, we need to look at when seeing a mark-home expenses, it's your year of assessment 22-23 is the last year, which is applicable for the additional deduction on the mark-home expenses based on your 65% value addition. Then depreciation, it should be disallowed. Amortization of ROU disallowed. Fines and penalties disallowed. Legal fee, you need to look at the nature. And the consultancy fee, again the same thing. From whom I have taken the consultation? Is it from individual? What is the amount? 5% withholding tax as deducted if the amount increased by its amount exceeds 100,000. Then the business meeting expenses by name itself, seems to be relevant to business, and ESC written off, research and development, ESC written off, any levy which is charged to income statement after expiry of the recoverable period, and research and development expenses, and the foreign travel expenses. Then these are the particularly which includes in the notes to the financial statements under these expenses categories. Now the question is, are we going to adjust these things now? No, I need to go for the notes separately. Then here, which is the next one, which is finance income. Interest on investment in treasury bills. Let me take this. When looking at the interest on investment in treasury bill, what comes to your mind? Then if it is a treasury bills, it's a secondary market instrument, treasury bill, treasury bonds, both. Being a secondary market instrument, is that withholding tax provision is there or it has excluded? It is excluded. Treasury bills and treasury bonds not subject to WST. Then it's given in the section 84, subparagraph 3. Then in there, now don't take 5% on these and take as a tax credit. Please don't do that. This is excluded from the withholding taxes. And interest on fixed deposit, obviously, we need to look at whether this is gross one and it's a compulsory WST deducted from 1st Jan 2023. Then this both 2566 you have to remove from your profit before tax, and you need to take the gross ones to your investment income. Not only that, for the fixed deposits, you need to take one, the withholding tax credit. And for one adjustment, how many parts you need to adjust in the computation. And finance cost, interest on loan, OD interest, interest on ROUA lease liability, definitely disallow, and bank charges. Then this is a total for what these things. For ROUA, anyway, it's disallow. For other finance, for other mean two, interest on loan and the OD interest. Then for this two, what you have to do, you need to go for the section 18, the restriction on deductibility of the finance cost, which is the any finance cost which is qualified under section 12, we need to limit to the under section 18 stated capital and reserves into 4 times. Then this is a hint for that, and we are starting from the adjustment. Now I'm starting doing the question. This is all what we have done as a background for you to be a comfort zone with reference to the answer. And here from the adjustment Roman 2, I'm starting. Details of assets acquired during the year are as follows. Now these are the assets acquired during the year. If the assets acquired during the year, what you have to do, simply you have to provide the capital allowances. Then for these, let me start from here. One important thing, then here, but what they have started, it's not the profit. They always not the usual thing happen. This is in the pre-scene also it has given. Then it is a loss for the year or financial year. Then you have to start from 11 million, which is 983. Then I'm starting from that, which is the, in my business income, I'm starting from that, which is the CSL, and the computation of business income for year of assessment 22-23. It's the loss before tax, and it should come into minus sign. Either you can go for the add or a minus, and for the easy thing, I have taken plus and minus in this manner. Then the profit before tax, as per the question you have to take, we have taken that. And the next one, the property, plant and equipment or depreciable asset. The building, 40 million. Building is the The class 4 depreciable asset, number of years, it's 20. Furniture and fittings, class 3 depreciable asset is 25 million. Number of years, 5. Office equipment, same class, 7.5 million, it is 5 years. Vehicle, lorry, again, it's 5 years. Compute equipment, it's again 5 years. Capital work in progress. For capital work in progress, you cannot provide capital allowances. Why? What's the reason? Reason is we are providing capital allowances for what assets? Depreciable assets. What is the meaning of a depreciable asset? Depreciable asset is the owned and used asset which used for what? Production of income of the business. And due to using that asset for the production of income of business, which is the value going to be reduced with the timeline, which is in the time frame. Then capital work in progress is not a finish, it's not used for the production of income, then this is not a depreciable asset. Then other than this one, for all other assets, we need to compute what? Capital allowances. Very easy adjustment. It's not taken even 1 minute. Then let me come to here, which is adjustments on capital allowances. Capital allowances on assets acquired during the year, as I have discussed, for building 20, furniture and fittings, office equipment, lorry, compute equipment, capital work in progress. You have to give your opinion. Please write these things. It's not only taking a 1 second for you to write just this is not eligible for capital allowances, not a depreciable asset. It is not take much time. Please write what's in your mind. Then it's good for you. Then here, capital work in progress, then it's not eligible for capital allowances. And for the all other assets, it's for building 20, this 5 and all other assets by dividing 5. This is only additions during the year. Okay, that adjustment completed. Now come to next one, which is the depreciation allowances claimed during the year of assessment 21-22. Lamai, when it comes to this 21-22, is that our year of assessment? No, it's my previous year of assessment. What is the amount of capital allowances claimed for that year? It's 19,335,000. Then what's the condition? Is as usual. This one is, if you are, please get familiarized with the papers. One of the very, very, very good things for you to pass the examination. Then it is something essence for you should have time it and do, or else if it is 30 marks, time it and do, 25 marks, time it and do, then it's a very valuable material, most valuable material which you have to take the marks and understand the patterns. Then here, which is the none of the assets reach their full tax depreciable levels in 21-22. But let me take this aside. I will adjust this within 2-3 minutes because I need to come for adjustment number 4. Before coming to this, I need to come for adjustment number 4 because I have seen this 2 years. The year of assessment 2021 and year of assessment 1920. And in the paper, one sentence given, none of the assets reach their full tax depreciated levels in 21-22. Then, now this is on the disposal. Let me come to that. CSL disposed a few office equipment and computers during year of assessment 22-23. The total sale price of the said assets were rupees 5.4 million. What is that? The total sale price of both assets. Then after that, other details are as follows. Now, what is the year of purchase and the cost? My eye has stopped in here, year of purchase. Now, year of purchase is 2021 and next one 1920. Now, count the period. It's the office equipment 5 years, computers again 5 years. If it purchased in 2021, for the year of purchase, we are giving capital allowances, and year of disposal, no capital allowances. Then it's a 2021, 21, 22, 22, 23. It's a 2021, 21, 22, 22, 23, the 3 years. Almost, that's mean other than the year of disposal, then it's 2 years has gone. Now, when it comes to computer, 1920, 2021, 21, 22, almost 3 years. Now for this one, this 19,335,000, it's given for opening depreciable assets which held at 31st March 2022. At that is a capital allowance claim for previous year. Now for that capital allowance, these two assets, capital allowances also included, which we have disposed during the year. I think it's clear. This 19,335,000 should be reduced by the capital allowances taken for 21-22 with reference to these two assets. Why? For year of disposal, no capital allowances. This is given the previous year figure. Therefore, from this, the particular capital allowances was applicable for 21-22. That means we need to remove that too. Why? The 21-22 figure given as same, we cannot take this 21-22 figure for 22-23 because there are two assets which was not fully depreciated or not fully capital allowances claim, it has disposed. Then in earlier, I think most of the questions it has given, which is the useful lifetime or the already capital allowances fully claimed. But for this paper, it has given there are remaining years or remaining tax written down value is there. Then you have to think on these things here. Then you need to remove the capital allowance applicable to these two assets in here. Then first, let me do, since the adjustment number 3 is there, let me, anyway, I will complete adjustment number 4 and come to 3. Now this is the disposal. I have sale proceed, I have the cost, I know what's the number of years of the capital allowances, then it's easy for me to compute the disposal. Again, then I'm coming to assessable charge in here, which is the, okay, then in here, which is disposal of depreciable asset, there is a one consideration. Here we go, and in the question, it has given the cost 5.5 million, for computer 4 million. Then here we need to have the for consideration, and we need to take the consideration less tax written down value. What is the tax written down value? Then for office equipment and the computers, which is office equipment purchased in 2021 and the computers 1920. In here, the cost is 5.5 and 4, which same as I have read the question and taken, and I need to go for a cumulative capital allowances claim. Then for office equipment, which was purchased in 2021, like I have count 2021, 21, 22, 2 years given. Then here, from the cost divided by 5 years and is multiplied by 2. And for this one, for computer, almost 3 years, we have given the capital allowances. Then here, 4,000 divided by 5 into 3. And this is which is, after taking all these things, then this is my tax written down value for this asset and the tax written down value for this asset. And this is my, after taking this is my tax written down value, the total of these two. Then afterwards, my assessable charge consideration is high. tax return down value is low, I have ended up with the assessable charge of rupees 5 or rupees 500,000. Okay, this is my assessable charge. Then let me come to here, which is the assessable charge. Working 1, rupees 500,000 we have adjusted. Now let me come to capital allowances on opening depreciable assets since we have done this. Then I'm coming to quickly on this. Capital allowances on opening depreciable assets. We have in the correction, it has given 19,335,000. Then from this, I need to take less capital allowances applicable for disposal for office equipment, which is 1.1. How to take a 1.1, which is my cost is 5.5. It's divided by 5. Then it's 1.1. In here, my cost is 4 million. It's divided by 5. It's a 800,000. Then here we go. This is my opening capital allowances applicable for 22-23, which is for our year of assessment. Then this adjustment it has completed. Then I'm coming to here, which is the capital allowances on opening depreciable assets. Done. It has completed. Now come to next adjustment, which is in terms of the adjustment 5. The right of use, you should be familiarized with these things from the considerable time. This has been tested. Then also this time mean this June 2023 paper, it is there. The right of use asset and lease liability represent the SLFRS 16 adjustment with respect to a lease agreement entered in year of assessment 21-22. Then no harm for us. 2, convert an adjoining building to a new restaurant for the hotel. That's the purpose. And that means there is a land lease. The agreement relates to 10-year lease period where payments are made on an annual basis. The corresponding lease liability of rupees 48.5 million is shown under interest bearing borrowings in statement of financial position, which is in your pre-C. Actual lease rental paid during the year was 6.5 million. Now quickly I'm doing this adjustments on finance cost charged to the income statement on the ROUA. It should be disallowed. Why? We are allowing this actual lease rentals paid 6.5 million. Actual lease rentals paid mean then it is what? It's a capital plus interest, both we are paying. Therefore, that particular finance cost, which we have deducted in our profit before tax, we have to totally add back that. Then, the next thing, which is the amortization part of it, which we have taken, we have ready. Amortization of the ROUA, this should be what? This should be add back again. Then the 3 adjustments you have to do, which is amortization of ROUA, you have to add back. The actual lease rental paid, you need to allow. And the next one, the next point, which is you need to take which is the finance cost in totally, you have to be disallowed because under the payment we have 2 components. One is the capital, other one is the interest. Okay. Then let me come to that thing, which is here. Actual lease rentals paid on ROUA, it's from the extracting things correctly and adjust accordingly. This is that. And the amortization of ROUA, it's in my income statement. It should be disallowed. And again, which is in the finance cost, which is interest on ROU lease liability. This shall be taken into consideration here, and it should be added back. Interest cost on ROUA. Completed. Okay. And then The next adjustment, which is now here, adjustment number 6, rupees 4.2 million was incurred as an improvement expense. Improvement expense which constituted a major modification to a machinery that was purchased during the year of assessment 2021 at a cost of rupees 25,500,000. This is the cost given, year of purchase given, and the nature is the improvement expense. What is the amount of improvement expense charged to income statement? 4.2, which is given in the adjustment. Now, what you have to do? You have to apply the provision of the section 14. The name is the repair and improvement. Now, when it comes to this repair and improvement adjustment, you have to divide this two. What's the one? One is the repair, other one is the improvement. When it comes to repair, in the improvement definition, repair has excluded. Then for repair, what you have to look at, Lamai? For repair, you need to look at whether that repair has incurred for the production of income during the year other than capital nature. What is that? The application of the main deduction rule, which is section 11. But for improvement, what you have to do? Then on the improvement, you need to look at the first thing, whether that improvement has charged to income statement. In our case, yes, it has charged to the income statement. Done. And the second thing, we need to look at what is the corresponding asset. It should be what asset? Depreciable asset. Don't forget these fundamentals. Then it should be a depreciable asset. In our case, is it a depreciable asset? Yes. What is that? It is a machinery. Then it is a depreciable asset. Then here, in that depreciable asset, then improvement has incurred. What is the adjustment? We have to go for 2 again. What's the 2? 5% or 20% on what? On my previous year tax written down value. Now, why 5? Why 20%? 20% is for other than the class 4 depreciable asset categories. The 5% is for class 4 depreciable asset category. What's the class 4? Building structure in the permanent nature. All other things is other than class 4 asset category. Then for other than class 4, it's the maximum limit 20% from the previous year's tax written down value. For class 4 building and the permanent nature structures, it is what? It's a 5% from the previous year's tax written down value. In our case, it's a machinery. Then we have to compute maximum limit by taking what? Previous year tax written down value up to 20% of that is my maximum limit. Now, what's the previous year for us? Now we are in 22, 23. Then for me, the previous year is 21, 22. Then we have to compute what? Tax written down value. What is the further amount which we can provide capital allowances? That is my tax written down value. Then I need to compute that. Now come to the question. It is given, it's purchased in 2021. Then 2021, we have given the capital allowances, 21, 22 given. How many years we have to give? If I am looking from 21, 22. 21, 22 වල ඉඳලා මම බලනවා නම් which is how many years? 3 years I have to provide the capital allowances. That is my tax written down value in 21, 22. From that, the 20% I need to take. Let me come to the computation. In here, disallowable improvement cost. Then, how are we going to compute that? This is the improvement cost of machinery. Then here, previous year tax written down value. Then, this is how it has computed. Let me take this. What is the cost of the asset? 25 million. 25.5, then it's 25.5. It's a 5 years. Already we have given the 2 years. Then 25.5. Then from this, what is the tax written down value? Then this is 15.3, which is for 21, 22 end. Okay, this is that. The same thing it has done through this calculation. And maximum limit, where it has mentioned maximum limit 20% as per the provisions of the Act, which is previous year tax written down value, we need to go for section 14. We need to apply the section 14, and from these we need to take the 20%. Then maximum limit, this what we need to compare. It's only 3,060. What is the amount we have charged to income statement? Then it's the 4.2 million. What is amount to be disallowed? The gap in between 2.4 million and the 3,060,000. Then max excess over maximum limit, or rather, what is this? Disallowable improvement cost. This is 1,140,000. This should be disallowed. And let me come to this here, which is disallowable improvement cost supported by the working 3. Then this is that. Completed. Now come to this one. If you have any question to clarify after completing this, please ask. Then whatever the questions I will clarify. Then the next one of the easiest adjustment, which is gratuity payment made during the year was 1,635,000. While doing this, I'm taking gratuity provision also. But this is the gratuity payment, which is an allowable deduction. It's not allowable deduction. It's allowable deduction. Deduction means it's not a deduction from your profit before tax. It's my actual utilization. Then actual utilization, which we have just to retirement benefit obligation as a payment, which in the financial position, we need to take that to tax computation. Since we are disallowing the provision, actual utilization, we need to allow. Then this one. And the same, I need to come for my income statement note. In that, as a third point, we have provision for retirement benefit obligation, which is 3,635,000. This should be disallowed and the payment should be allowed. Easy adjustment. Then here, payment for gratuity and the provision for retirement benefit obligation. These are the two. Completed. And the next one, which is the next thing, which is next adjustment. Markup expenditure. Marketing and communication expenses incurred were as follows. Then this 9,743,000, it was in here. We are adjusting to that, which is markup expenses, marketing and communication expenses. Okay. What it has given in the detailed note, nature of expense and the amount. Social media advertising, obviously, you can deduct. It's already deducted from your PBT. Now, what you have to look at, can we go for additional deduction of another 100%? To that, what you need to go for, there is a gazette notification for markup expenses. In that, we have to compute what? 65% value addition is there or not, and according to Gazette and the 6th schedule, which is temporary concessions, we need to identify whether there are any markup expenses which not qualified for the additional deduction. Now I'm doing that. Social media advertising, okay, it can be deducted. Then we need to look at for additional deduction criteria satisfied. Foreign traveling expenses under section 11 made deduction rule and marketing and communication expenditure. It's incurred for the production of income. It can be deductible. But again, for taking a double deduction, no. And printing expenses, which is a brochures, yes, it can be taken as a markup. And if the particular thing satisfied, then 65% satisfied, then you can go for double deduction. Internal marketing staff salaries and allowance, no, we cannot deduct that under the double deduction. Now, even we have discussed that, okay, we can go for double deduction for the social media advertising and printing expenses. Then we need to look at what's the position of the 65% value addition. Come to next. Per the audited financial statements of CSF for the year ended 31st March 2022, which is your previous year, the criteria is that as the gazette, the company has satisfied the criteria for local value addition of 65% per the relevant gazette notification. How nicely it has given to you. Then no need to compute, but for previous exam, also this calculation was there. Then you can take the marks from these things. Then here, which is 65% value addition is there. You cannot deduct, you cannot take that benefit for foreign traveling expenses and internal marketing expenses, but obviously for social media advertising and printing expenses on brochures you can take. Now, all these four you have to mention in your answer. Then eka mokadda, then nathi eka mokadda, both you have to mention in your answer. Then here, which is the marketing and communication expenses, which is additional deduction. As per the information, 65% of value addition criteria has satisfied. Okay, then some word are missing. Okay, it has satisfied. Then the social media advertising, as I have mentioned, yes. Foreign traveling expenses, it's not eligible for additional deduction. Then printing expenses, it's eligible for additional deduction. And the internal marketing staff salaries and allowance, it's not eligible. This is on the Marcom expenditure, that total adjustment. Then the next, which is the adjustment number 9, bad and doubtful debts include the bad debts write-off amount into rupees 2,520,000. Let me come to my income statement. In here, bad and doubtful debts 4,180,000. This is that. Then the details in that note, it has given for this one. Then here it's a bad debt write-off. That total expense, it has included write-off amount which is allowable if the legal actions were taken. Now we will look at further information. I will mark this as important. Then in here, adequate action was taken to recover this debts before it was written off. Then I am good. I have taken the particular legal actions to recover. The balance amount relates to the provision made in respect of debtors exceeding credit period of 120 days. The balance, it's on the doubtful or the bad debt provision. Now in the expense charge to income statement, 2,520,000, it is for the write-off and the particular legal actions has been taken. Then therefore it is and what? It is allowable deduction. And the balance part is to the provision. Then under section 10, which is disallowable expenses provision, it should be disallowed. Now let me come to adjust these two in here. Bad debt write-off, adequate legal actions were obtained, then this is an allowable deduction, which it has already deducted. Then you don't have to do anything. And the provision for bad and doubtful debts, what is the amount of the provision? It was charged to income statement 4,180. It is 4,180. It's here. From that, we need to deduct the write-off part, which is 2,520,000. Then this is the balance. Then this is my provision, and it should be disallowed. Okay, that total adjustment it has completed. And the next one, which is the professional fee, which WST provision is relevant or not, we need to look at. The professional fees were paid to an, now the question, independent lawyer. For what? Labor tribunal cases. On the other hand, if that withholding tax provision is not there, then for labor tribunal case, it's incurred for the production of income. Then the legal expense, it can be deductible if the relevant WST has been deducted. Now we need to look at what has been happened, which is the labor tribunal case in March 2023. In March 2023, the withholding tax is applicable or not? It is applicable. Then if it is applicable, this company CSL has to deduct withholding tax or not. When making the payment, we will look at what is the payment. Is the professional fee, is that more than 100,000 or not? In the professional fee, 646. Yeah, it's more than 100,000. In the month of March, it's a calendar month, then it's more than the 100,000. Then what has happened? Did they deduct WST? WST has not been deducted on the payment. That is the question. The WST has not been deducted on the payment. Then here, since the WST has not deducted, under section 10, subsection 2, can you take it as an allowable deduction? No, you cannot take it as the allowable deduction. Then therefore, even the expense has incurred for the production of income. Then if the relevant part of the WST has not remitted to the Department of Inland Revenue, under section 10 subsection 2, it should be disallowed. Then that entire 646, it should be disallowed. Then here, the professional fee relevant to WST has not been deducted. It's disallowed under section 10 subsection 2. Done. And the next, which is the consultancy fees were paid for a valuation assignment for the potential disposal of CSL shares based on the offer received by the company. The valuation fee. Why we have paid the valuation fee in the CSL? Potential disposal of CSL shares. Now, is that incurred for my production of income, my hotel? I'm a Crystal Sand Beach Hotel. Then, did I incur this expense to production of income of my hotel? No. This is for my prospective disposal of shares in the future. What I have to do for that, I have to take a consultation. Then this is not relevant to business. What is the consultancy fee? In here, consultancy fee 2.3 million. Consultancy fee is 2.3 million. Then it should not be allowed to deduct. Consultancy fee disallowed. It's not incurred for the production of income of business. It's not directly relevant to the business. Then it shall not be allowed to deduct. Done. And the next, which is the next, the company has made an inventory provision, anywhere provision is allowed, amounting to 3,467,000 for expired and slow-moving items during the year of assessment. The actual inventory write-off amount recorded through the provision account during the year of assessment, 2,560,000. Then like in this, which is in the bad debt, in the same thing, in the provision and the write-off, it has given. Then inventory write-off 3,467,000, which is slow moving and expired, it should be allowable deduction. And the provision included in here, it shall be disallowed, it be in a provision. Now come to these, which is the inventory provision. Then it's the 3,467,000, which is inventory provision, and the inventory write-off, which is the amount 2 million or something, then it should be an allowable deduction. Now come to here, which is the inventory written off, it's allowable deduction, provision for inventory, which is 3,467,000, it should be an, which is the disallowable expense. And the next, which is the CSR expenses. CSR expenses relating to donation made to the Ministry of Health for the purpose of purchasing essential medicine. Then for whatever it is to essential medicine or whatever, when computing the business income, what you have to do, it is not allowable deduction. Why? It has not incurred for the production of income of the business. Then let me disallow the CSR expenses as charged to income statement, which is 3.3 million. This entire 3.3 million we need to disallow. CSR expenses 3.3 million, it should be disallowed. Done. Then it's a purpose it has given. What is the purpose of the CSR expenses? It is to the to the government, Ministry of Health we have given for essential medicine. Then, not wasting my time, I'm coming to my tax computation. And here, under the qualifying payments, I will take this, which is a qualifying payment, which is deductions from assessable income, and from that, donation to Ministry of Health, which is donation to government up to the assessable income or actual donation. Among that two, the lowest one you can claim, then accordingly 3.3 million, then the same amount of the CSR activity or CSR amount we have claimed. It has done. Now next one, fines and penalties relate to payment made to EPF, ETF and the Department of Inland Revenue for surcharges, penalties on several late payments. Then for this, any penalties charged to the government, then it shall be disallowed. It's directly given in the section 10. And here I'm coming to this, which is the penalty, fines and penalties 2.8 million. Fines and penalties 2.8 million. Then here, this one, fines and penalties, it should be disallowed. Very, very easy adjustment which the students can score marks. And the next. Here, the legal fees represent the payment made to the company lawyer for bad debts recovery case. Now, in the legal expenses, represent it's to the bad debts collection, definitely incurred for what? Incurred for production of income. We will look at what's the amount of the legal fee. Legal fee is 1,850,000. Assume that it has paid to, if it is there after 1st January, the relevant WST has deducted. Okay. Then it's silence, then you can put it and you can do, because it has not that one time it has tested under consultancy. Then all over the paper it's not going to test. Then it's a legal fee for bad debt recovery. It has allowable deduction. Then you can even put a note for this, which is the relevant WST is deducted and the after January, then any assumption you can put, then since the question silence, then I have put here as the allowable deduction is the reason is incurred for the production of income to recovery of bad debts, and the next, which is on the assuming that relevant WST is deducted on that part. Then next, then we have done a lot. And staff welfare includes expenses relating to training session conducted for the benefit of the staff of the company. Totally allowable deduction, nothing you have to do, which is in staff welfare, which is here 1,490,000. This includes the staff training programs, obviously deductible incurred for the production of income. Staff welfare training session is allowable deduction under section 11. And the next, which is business meeting expenses were incurred in respect of entertaining travel agent, and that was your business meeting. And it includes an amount of 1,850,000 incurred for liquor and tobacco. Now, entertainment definition is given in section 10 under the disallowable expenses. Food cost is allowable deduction. Beverages, yes, other than liquor and the other than the tobacco, then this 1,850,000 under the definition of the entertainment under section 10 shall be disallowed. Then what is the amount of the business meeting? Let me highlight it without missing any single adjustment. Then this is that the business meeting expense. In here, in the business meeting expense, entertainment expense on the liquor and tobacco, it's a definition under the entertainment. It's the part given in the fraction. It should be disallowed. And the balance part, why it's a balance part? There is another component in the income statement. Then the balance part, it is allowable deduction under section 11. That is on the entertainment. And the next few adjustments we have to go. R&D expenses were incurred in relation to developing a new IT system to improve the customer booking experience for the purpose of company business development. Very clearly, it's a touch upon with the section 15 subparagraph 2 on the research and development, that particular part B, which is on the improvement of business or upgrading the business, it has given. Then it's the developing a new IT system to improve the customer booking experience, purpose of the business development. Then therefore, the R&D expense is already deducted from PBT. Then here, research and development, 3.4, it has already deducted from PBT. We can go for the additional 100% deduction, which is the last year, which is R&D expenses, 100% additional deduction applicable since the improvement of business process is directly under the category of the R&D, which is in the section 15. The research and development and agricultural startup expenses under that section 15 subparagraph 2. Then the next, which is foreign travel expenses relating to personal visit of Sajid De Silva. The Sajid De Silva of this hotel, he is one of the shareholders. In the pre-scene, if I have came into the pre-scene, in pre-scene, which is looking for the company. I wish I can see that. This is for CSL, CSL, CSL. This is Sajid De Silva. He is a shareholder of a company. Then it's gone for his personal visit, and that personal visit expenses charged to my income statement. Then CSL, then it shall not be allowed to deduct, which is 665. It should be disallowed. In here, foreign traveling expenses. Sorry, I think I have made a mistake. Foreign traveling expense, I have highlighted the ESC thing. Then here foreign traveling expense 1,120,000, which is totally incurred for the personal foreign traveling. Then here, which is should be disallowed. And the next, which is already highlighted, ESC written off 665, this should be disallowed. Any levy or taxes charged to the income statement, then it's a written off which is irrecoverable, then it shall be disallowed in here. Then I'm coming to this ESC written off. Done. And the next, which is the CSL, recorded the dividend income of rupees 510 in February 2023. Read the questions very, very carefully. This is in February 2023. That's mean after 1st January 2023. Then the withholding tax provision is applicable, the 15%, and which is a final withholding payment. Then from its investments in shares listed in the Colombo Stock Exchange, then per the dividend warrant issued by the relevant company, rupees 90,000 was deducted as WHT. What is this 90,000? The dividend income is 510, which I have received. Now test if now I'm receiving the dividend income, or it's a 510 and it's a 90,000 WHT deducted. If this is 15, what is the 100? It's 600,000. That's mean from this is my net dividend income, which I have recorded as other income in my profit before tax. And this 90,000 is what is my final withholding payment. Then here, I'm coming to my other income. In the other income, which is dividend income 510. First, what I have to do, I have to remove this from my business income. Now, Lamai, when taking this adjustment, what you can see, always do this calculations and check whether what is type of the dividend. Now it's a dividend deducted, WHT deducted 90,000. If it is 90,000, then it's a 600. Now from 600 minus 90, then it's my dividend income, which I have already recorded 510. In this dividend, do we have a dividend received out of dividend income, which is exempted? No. This totally the final withholding tax or the 15% deducted dividend. Then in deeming provision, what is this? Dividend distributed out of profit. Then here, dividend income, I need to remove it from my business income. And I need to go my investment income in here. Dividend income, liable dividend. How I have taken that proof from doing that adjustment? The 510 equal to 85%. එහෙම ගන්නවට වැඩිය that 90% deducted amount. That's mean the 90,000, that 15% deducted amount has given to you. Then just check 90,000 equal to 15. If it is so, what's the amount of 100? Then here, liable dividends paid out of profit. Applicable to last 6 months. Why? It has received on which month, Lamai? It has received on, if not mistaken, February 2023. Then if it has received in February 2023, it's obviously for last 3 months and the withholding tax has deducted, last 6 months, then I have taken in here. And I have shown here the gross dividend, which is, it's equal to 600, just to show that. And the next, let me take a color on this without mistakenly doing anything in the adjustments. Then next, which is the rent income, represent the income received from renting out part of the hotel premises to a third party to operate an ornament shop. Now what is given? I have my hotel. That hotel premises I have given to third party. Now my hotel premises, is it my depreciable asset or investment asset? Is that hotel premises is I have kept for capital appreciation as investment asset or to use my business? To use my business. Then there is a letting of what? Letting of my depreciable asset. Is this investment income or is this effectively connected to the business? This is effectively connected to the business. Then here, this is monthly rent. Now, what one fraction I have sorted out. Now I need to go for next question, which is what is the monthly rent? Then the monthly rent income is rupees 60,000. Is it exceeding 100,000? No. Then the withholding tax implication is there? No. Then, and it was given on a rent during the 12 months period in year of assessment 22-23. All the details given. What's the final thing? This is not an investment income, no withholding tax credit. And under my other income, this is that, which is rent income, 720. This is effectively connected to the business. I don't have to do anything. Here we go, which is under business income, rent income. It's effectively connected to the business. Done. And the next, which is the interest income received in foreign currency, amounting to rupees 616, amounting to rupees 616,000 was included under interest income on fixed deposits. The balance amount was the gross interest. Very clearly, all the details provided to you. Gross interest amount that was received in March 2023. What's the month? March 2023 in LKR. The amount of the gross interest given, the month has given, very clearly everything given. Then it's the March 2023, the application of the withholding tax is there or not? It is there. It should be noted that all interest has been earned evenly throughout the year. I will check this evenly throughout the year part to other than for fixed deposits. Because for fixed deposits, it's the exempt part given and the liable part, date of recipient, the date of the received given. Then I'm coming to here. In the finance income, for this treasury bill part, I will take the evenly throughout the year. For fixed deposit, I will take the details which actually what it has given. Now let me come to that, which is in the fixed deposit and the treasury bill finance income. The total 2,566,000. I need to remove it from my business. No, I need to remove it from my profit before tax. Then here, when computing my business income, the interest income, T-bills and FD, which I have removed here. Done. And afterwards, which I need to take, under investment income, be careful. I need to do 3 adjustments on FD, exempted, FD, liable, FD, 5% withholding tax, treasury bill, evenly throughout the year, 6 months, 6 months. The 4 adjustments you have to do. And here, which is under investment income, under interest from fixed deposits, exempt interest income, which is the total 616. It's evenly throughout the year. Entire year, FD exemption is there, which is interest income received under foreign currency. It is exempted under the third schedule for entire year 22-23. Then I have divided these 2 exemptions. Since it's exemption, it's even for taking up one part, it's good, but it's a detail given, no, evenly throughout the year, it is there. Then it's taken. Then the liable interest income is total 1,116,000. Exempt part 616 it has removed. And for the last 6 months, because it has received on March 2023, then for last 6 months, it has taken the 1 million here, which is March 1, the last 6 months. And for T-bills, then it is for under evenly throughout the year it is there. Then for the board, 50%, 50% for last 6 months and the first 6 month board, it has taken. That is on the end of the adjustment on the finance income. Let me take finance income and conclude that it has completed. Then the next is on the installment payment. The company has made advance income tax payments amounting to 1.5 million during the year of assessment. Then let me come to here, which is in my taxable income, my tax computation. Let me take it quarterly installment payments as per the question as it is, which is 1.5 million. Completed. Not the question has completed. Now what I'm doing, I'm taking from the income statement. Whatever I have means I'm taking quickly all the things which is the cost. Sorry, I had to do one adjustment which is under investment income, fixed deposit. On this I need to take the 5% of withholding tax, and it should be taken as the tax credit, which is rupees 50 under the tax credit WST on interest on FD. And let me do the revisit the question. From this, I think everything taken, including loss before tax, revenue done. Now I'm coming to other income and gains, rent income done, dividend done, profit on sale of fixed assets 477. We need to remove it from my business income. And again, fair value gain on disposal of listed shares 450. I need to remove it from my business income. Now come to here under business income, which is profit on sale of fixed asset, gain from disposal of listed shares. Both I have removed from the business income, and I need to come for investment income, gain from disposal of listed shares. Since it is exempted and I don't have any information on which period, then I have taken it for a second period. Under the exemption under third schedule, subparagraph H, if not mistaken. Then next are all other income and gains completed. Now in the admin expenses and selling and distribution, salaries and wages, allowable deduction, laundry expenses done. Depreciation is the only thing we have to do. To 42, 300, 230. Then in the depreciation, it should be disallowed. It should be disallowed. And the next, which is finance income done. Now the finance cost, which we have to go to finance cost. The interest on loans and OD, it's which is obviously it's no details given, which is disallowable for computer disallowable part. Then it's assumed to be it's incurred for the production of income. Then we need to go for that adjustment, which is ROUA. In the ROUA, it has given what is the liability under ROUA. The lease liability 48.5. In this 48.5 million, it should be removed from this, the total loans which is given in the financial position of the SCL, because we have overdraft, we have long-term loan, we have short-term loan. From that three, we need to remove this 48 point that amount, and we need to take what is the actual borrowing subject to this finance cost of interest on loans and the OD interest. Let me take it, which is the restriction on claiming of finance cost. Then here, maximum borrowing limit as per details of the pre-scene. In the pre-scene, it has given stated capital, which is 200,000 plus reserves 29,564. With this, we need to multiply this by 4 times, no revaluation reserves and anything. And actual borrowing in the financial position, we had long-term loan, short-term loan, and the which is the overdraft, and this is the total. And the liability, and I think I had the pre-scene document. Let me check whether I have it. No, I cannot view in this here. It's in the pre-scene, all these details which I have extracted from there. And this is on the ROUA liability, which we have to remove that. Then the total borrowing subject to section 18 is this. Now we have maximum borrowing limit more than the actual borrowing limit. Therefore, entire finance cost is allowable deduction. This is a note. Since there is no excess borrowing limit, all finance cost other than ROUA interest allowable deduction. That's why my ROUA interest we have disallowed. Separate adjustment. What's the logic behind we are disallowing ROUA? Why we are not taking it to here under section 18? ROUA, it's not a depreciable asset. The one thing. Then the second one, we are giving for that for finance cost. We have to disallow and we are allowing what the actual payment. Payment includes interest and capital both. Therefore, the 2 times we cannot give the benefit. Therefore, we need to disallow the finance cost. Then that's on that. And any other thing which we have to do in the finance cost? Completed. I think all other things we have done enoughly, nothing missed. Okay, then that's the end of this. Then I have to take the totals here. This is the disallowable finance cost. It's nothing, just to discuss and show on the adjustment as a repressure. And this is the total. I think everything is good. Yeah, all the things taken. It's on the plus side total and then the minus side total. Okay. And this is my business income. I have not ended with the business loss. I have ended with the business income. Okay. And this is the thing which is other than specifically mentioned adjustment, everything it has taken into consideration. And let me take the investment income, which is the totals, and I will take the inclusions, that total, which is of these two, done. And I need to come for my taxable income quickly. In the taxable income, the business income total, investment income total, this is my assessable income. Then from this two, and from this, I need to take the qualifying payments. And from the qualifying payments, after that, I'm ended up with my taxable income. Now that small game, which is application of the different tax rates are there. Now to come up with that, how many things you have to do? Then let me come to that, the breakup of the assessable income and take the computation of the tax liability. In the business income, it should be divided into a portion. Now, either we can go for actual, either we can go for apportion. Now, it's going for apportion is very easy. Then in the apportionment basis, in the exam is apportionment, then the 6 month. Then for the first 6 months, business income divided by 2. For second 6 months, business income divided by 2. And this is my total. And the qualifying payment now for first 6 months is a 14%, is a hotel. Then it's a industry of the promotion of tourism. Then it's a 14%. The next 6 months is a 30%. Then I have given the qualifying payment benefit to the second 6 months, which is the higher rate. Whatever from the higher rate, I have taken the benefit. And this is my tax liability. Yeah. Then there is the total tax liability. And on the investment income for the first 6 months, we have the interest income from fixed deposits. Do we? Oh, no, it's not the interest income from fixed deposits. Sorry, it's the interest income from treasury bills, which is not subject to withholding tax. Then it's a 475, which in here we go. This is evenly throughout the year that we have divided. Then afterward, it's the 24, and for the last 6 months, which is on the treasury bill and the interest income on FD board is a 1,475. Then it's on the 30%. Then this is that, and these are the totals, and this is my tax on taxable income, which is taxable income 13,590,000, which equal to this, and my tax liability is this. From this, the tax credit you have to deduct, and the WHT on fixed deposits, which is non-final, the 50 you have to deduct, and this is my balance tax payable 1,303,000. This is the end of the question of the question 3, which is for the 30 marks. I will come to your question. There are 3 questions. I will come to all, but I need to come for this, which is on examiner's comments. Which, how can I take this? In here. It has with this part. Let me stop share and let me take it and share again, which is the same thing came. Okay. I will take a new share and now good. The examiner's comments. I will take a 1-2 minutes on this. This is very, very important for you. I will, since we have done the question 1, then I will take the question 1 after discussing the entire paper. I will take the other comments on the other 2 questions and the overall comments. And here, which I need to come for question section 2, question 3, part A. Candidates perform relatively well in this 50-mark question, especially in part A. See on the calculation how you have done, it's good. Since the aim of part A of the question was to provide broad coverage of the syllabus, the performance seen was fairly in line with the examiner's expectation. How nice of you all. And for this time also, you should do and you should remain this in a constant manner. Then do this is a question which you can highest marks allocated in the paper, and the student, well prepared student, can score high marks on this. Therefore, keep the level. And this part was direct. All the candidates approached this part and were successfully able to score average 80% of the marks allocated. However, those who did not score well had the following shortcomings, like a plus, and I need to highlight minuses, not to do these things in your examination. which is the recognition of the sources of income. Whether now take the rent income, we have taken it as effectively connected to the business. It's not the investment income. Just looking at the name, don't take it as the investment. No, read the scenario and apply it accordingly. The recognition of sources of income. Some candidates struggle to identify or categorize the applicable sources of income. Candidates are reminded to carefully go through the given information. You have to read the question carefully in the question and then identify the relevant source of income per the applicability to the nature of the business. That's why pre has given earlier. So you to familiarize with your company, please apply these things to take the good marks, high marks to you. And the noticeable error here was that without paying attention to the given facts, many candidates treated rent income as investment income. How unlucky. If you have read that part, it's nothing. Then ignore the readily given factors. Don't just look at and apply. The readily given factors to determine that it is effectively connected to the business. Claiming of capital allowances, majority of the candidates successfully calculated capital allowances. Since it's okay, I'm not coming to that. The important factor is by reviewing working questions from the previous examinations. Candidates had unfortunately negligent. Don't do this negligence in this time. Unfortunately negligent to practice past exam question. That's why Lama, I'm always telling this is something very good thing for you. It's for you. The past question paper, it's for you. Then Patrice, that do it again. It's something very valuable value addition for you. Then Patrice, past paper questions in sharper dice case, past papers would have definitely helped. Yes, candidates to recall what they had learned. They would have also allowed candidates to identify some of the adjustments that were repeatedly tested. Of course, yes, accepted. These things are repeatedly tested on many occasions. A few examples: ROU asset adjustments, R&D, accessible charge, additional deduction on Marcom, allowable repair, allowable disallowable, which is improvement cost adjustment. Now, the need to consider all notes and tax adjustment thereon and how it's taking the bad debt written off. Then it's how you are interpreting your answer. I'm always telling you have to write the particularly justifiable. Now, if something is you need to justify, take a 1 second and write that. Then these are the things which I need to highlight in here. A lack of knowledge on recent amendments. Then why I have mentioned, look at the month, look at the year which it has received, treasury bills, there is no withholding tax applicable, the section 84 subparagraph 3, then all these things you should have to know. Then which is on B and C, we will come to later. Then this is on the examiner's comments, okay? Then let me again share the total screen to you. And here. Now with this, which is the question 3 on the section 2, which I really need to stop from here. And let me come to your questions. Whatever the questions, I will clarify now. Then let me come to the question. Can you share Excel answer sheet, please? Okay, I will provide it. Share the PPT, Puta, it's for last time pre-scene. Then for this time pre-scene, obviously, pre-scene analysis will be done. Then if you really need, okay. Then, hi, I'm an overseas student. Can I get this Excel calculation? Then we can practice with this since we have to, okay, I will share. Why think capitalization working is different as usual. What is that? Why think capitalization working is different as usual? What is the question you are asking? What I'm thinking, what is different? Then let me come to here. What's the difference? It is what we have to do in here, which is we need to take the information from the pre-scene. Let me take the pre-scene anyway. Let me take the pre-scene. I think I don't have the pre-scene in here. But let me, it is here. And common pre-scene for June. Okay. Then I will check and I will tell what's here. This is the financial statement of CSL. In here we have stated capital for CSL. I have taken from here. We have retaining earnings, no revaluation reserve, no general reserve. Lama, this is your last time pre-scene. Then I will show from here pre-scene June 2023. And from that, retaining earnings are there, stated capital. Then you need to take stated capital plus retaining earnings into 4 times. Then it's with the amendment. And after that, we have interest bearing borrowings on the non-current liability. This is that amount. And we have interest bearing borrowings in short term, which is 20. And we have bank overdraft 21,567. I think the calculation is good enough. And here, which is the same thing we have taken, which is 200,000 plus 2956.4 and actual borrowing, yeah, it's a 48.5. It should be, it's given in the question itself. This, which is, it shall be from the ROUA. It's not subject to think capitalization. Then that part, it should be removed, done. And we have just this. I think it's pretty okay. Then got it, madam. Okay, then done. And can you please explain the capital allowance adjustment done on opening balance? Why not? We will do it in here, which is the now in the question. I will do it in separately without explaining. In the same ones in here, as per in the question, the capital allowance or opening capital allowances claimed for 21-22. Then 21-22, this is my previous year. In the question, it has given none of the assets were fully depreciated. Then in the question, it has given as amount 19,335,000. In here, 19,335,000. This is that. Then here, it's cents. Okay. Don't think about a censor. Then this is my capital allowances, which is on the the previous year. Now, in the question, the wording, read the wording carefully. Is none of the assets reached their fully tax depreciated level in the year of assessment 21-22. This is for 21-22. Okay. Then we are in 22-23. What has happened? We have disposed 2 assets. Now, capital allowances relevant for these 2 assets also included in 21-22, that slot. 19,335,000. Then in that, can we take it, these assets? Now, we are computing capital allowances on what? Depreciation basis. What? Depreciation basis at the end of the year. Now, in 21-22, of course, this office equipment and computer is in the depreciable asset that basis. When it comes to 22-23, this two has disposed. A disposed karapu deke capital allowance ekat may 19,335 එකේ තියෙනවා. The capital allowances on the assets which we have disposed in the year, that one also included there. Then at the end of the year, these assets were not there. We cannot take that capital allowances in our year of assessment. Then therefore, the office equipment and computer, then we need to list, which is the capital allowances relevant to office equipment and office equipment and computer. Then I will take the total cost. What's the total cost? It's the 5.5 and 4. Then it's 5.5 million plus 4 million. Then in that, still there are a number of years to give. Then this divided by 5, 1.9. Then the capital allowances on opening depreciable assets for year of assessment 22-23. This minus this. Okay, then it's 17,435. This is that explanation. This is the explanation. I think it's clear. Let me again come to the questions. What is the past rate for last time? And I don't ask these things. I don't know actually. And the okay, the Fiumi, I think she's good. And improvement cost, disallowable portion, don't we need to add it to the depreciation basis of the asset? Yes, it should be added. It's a presentation purpose only. For this year, there is no such adjustment. That means for 22-23 computation, there is no adjustment. But you have to show that which is that depreciation basis with the improvement cost. It is the next year tax written down value for you to take. If I have shown it here, which is in this, which is the add-in of the disallowable improvement cost to the depreciation basis. Which is, it's a machinery. In the machinery, we have the, which is we have purchased in, I couldn't remember the year of purchase. Improvement adjustment. 2021, 25.5 million. Then this is machinery. It's the purchase in 2021. Then I need to take I will take the capital allowance, that thing. Then this is on description. And this is on I will take the cost. And the second one, capital allowances claimed previously. And the capital allowances for the year. And then the tax written down value without improvement cost. And then next one, which is the improvement and the tax written down value with improvement. This is the entire adjustment. And the cost is 25.5. And the claim previously, it was, again forgot, it was 2021 purchase. Then 2021, 21, 22, for 5 into 2 years, capital allowances given. Capital allowance for this year, 25.5 divided by 5, and my tax written down value cost minus claim previously plus this year. This is my tax written down value, my disallowable improvement, where it is, which is disallowable improvement 1140, and my tax written down value here, improvement cost plus without improvement cost, and this is improvement. This is that. Lamai, this is for not this year. Since you have asked the question, I have shown it. This is for the tax written down value for 23, 24 capital allowances on the remaining number of years. I think it's clear. This is for your explanation. For your question, the particular explanation has provided. Then I think explain why inventory write-off actual not deducted in your calculation since you have added back the provision. Then in here, it's given actual inventory, actual amount has given in the adjustment. And it's already deducted in your profit before tax, and the provision amount has given as the inventory provision. Then since in the question, let me take it again. And here, if I have made a mistake, let me check it again. In the question, where it's in the, yeah, in the question, it has given as the inventory provision. Then in the question, in that adjustment, what in my understanding, it is yeah, inventory provision. Even the question it has given for that. That's why I have not taken. The company has made an inventory provision. For that, it's a one thing. Ethering a full stop and it has completed. Then it is in the P&L. I have disallowed that the actual inventory write-off amount recorded through the provision account during the year 2.5. Then I have separately taken it is as allowable deduction. Since inventory provision, what is the inventory provision as at 31st March? It has given. Then it's in the P&L. Then I have taken it's whatever charge to P&L, I have disallowed. And in the adjustment also that has given. That was my understanding. Then that's how it was done. Any questions further? If I think all the questions I have explained, the particular relevant answers within my capacity, then if there are, I think no, then again, I need to do a session for the rest of the questions. Then very soon I will take that, the rest of the question and answer discussion, very soon I will take. And can we finish the session? Okay, again asking, disallowed is clear, but actual, why you didn't deduct it is in your calculation. Because the reason, again, I'm telling, the question, I have taken the question also, in my understanding, it's given as a provision this much. And the write-off this much, and even in the P&L, it's a provision has disallowed. Then the same amount. Then I have taken the provision to be disallowed and the write-off taken as allowable deduction without doing anything. Then if you have any the other than my view, then you can, it's a, if I think you are taking 3.4 minus 2 point, I have not done because in the PN is a provision wording and all the things separately given. Then whatever the things, it's not sure, then you can put your assumptions, valid assumptions, and you can apply. Okay. Then I think now I can stop. I have given all the explanations. Then we will meet again in a separate session to discuss more writing part of the paper and on the non-resident and the VAT part. Then thank you very much for your valuable contribution. And study well, work hard, then all of you all can take a good results for this paper. Then thank you very much and good night.